I think it's very positive for the Middle East. I think it's anti kind of big war. So
Yes, well, if that
I
does
think,
transpire, that's good.
Sorry to
yeah,
interrupt. We're now live. 1 minute before
Okay,
we start.
thank you.
yeah, I think he's basically, so most people see it as, Trump going nuts. But if you have enemies called China, Russia, and Iran, and you can't beat them, then you put on a little circus and you say, we're going to take on Canada, Panama, and Greenland and win. So that's what I think is going on. So I think it's a positive thing. I think it's positive. So no China, no Russia, no Iran. But
Focus is
unfortunately, the
elsewhere.
other three get stuck.
Well, let's get started. Hello, everybody, and welcome to the Global Energy Outlook Forum. We're looking forward now. We are in 2025, and we have a wonderful panel here in the Middle Eastern section and session of this 12-hour forum. We've had 2 or 3 panels on the region so far. We've just had one on OPEC Plus and OPEC and what strategy it may be pursuing. So we're not going to dwell too much on that in this session. We've had a session on geopolitics as well of the Middle East. And this one, in this half an hour, we're going to be focusing on the global oil markets, but from the Middle Eastern perspective, from Middle Eastern producer perspectives, and where that might be going in 2025. And I'm delighted to be joined by Kate Dourian, MEES contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington, D.C., Viktor Katona, head of oil analysis at KPLER, and Omar Najia, global head of derivatives at BB Energy. Thanks so much, everyone, for joining us for the next half an hour. Omar, maybe I'll start with you. We don't like to sort of necessarily forecast prices, but let's look at the price equation in terms of how everything else might be aligning with that going forward this year. We had an average oil price of approximately $80 last year. Many people already today, even in this forum, calling for a possible average of $70 for the year ahead. Where would you put your eggs, if you like, if you had to take a gamble on where we'll see that going this year?
Sorry, I was muted. So I think basically lower prices. I think there is, and I mean, oil doesn't trade like any normal commodity. It has like a massive amount of geopolitics involved in it. Uh, Trump wants lower prices. The US want lower prices. The US also wants to, increase its share of, oil production. And I don't see any reason why they can't do that. So I think basically prices will go lower. I don't see any kind of, war with Iran and any of this stuff because basically they are quote unquote unwinnable. I don't see anything to do with, anything to do with like Taiwan or anything like that. So I think Trump wants to focus on internal politics. I think his team, specifically his vice president, they're in it for the long term. And I think basically that I think it's going to be. I think from what I see already, his domestic stuff is going to override the geopolitical stuff. So on the big issues with China, with Russia, with Iran, I think Trump is going to be pretty peaceful because they are unwinnable for the US. It's already too late.
Okay,
So I
all
think
right.
that lower prices.
Okay, thanks, Omar. So, I mean, Victor, can I go to you with that thought? I mean, not so much Trump. We know what that's what Omar's opinion is on what that's going to do for the region. More peace, more stability. Even last year, with all the instability we saw in the region from a shipping point of view, from a regional conflict, and they're still going on, and bombardments on Gaza, etc., and Lebanon. The risk premium and the price was still very much under control. Now, with like potentially lower risk, where's the premium on the price? And will that support Amar's argument that we're going to it's all the way down, really? And of course, given the supply outlook scenarios as well.
Well, I would agree with Omar that the outlook is slightly bearish. I don't think a collapse will happen. Nothing of that sort. But it's slightly bearish because if Trump wants to challenge, say, competitors like China or Russia with tariffs, I mean, that's also an acknowledgement that he doesn't want to challenge them militarily. So this is 100% correct. I think the policies that Trump has so far promised are very much pro-peace. Of course, they will be slowing down global economy. They will create a tremendous amount of disruption in how we trade and what we basically do. But that is already an economic issue. That's no longer basically a huge political disruption. When it comes to economic disruptions, I think Iran will be pretty much front and center for what potential impact could Trump have on the Middle East and on the global sort of oil flows as well. Beyond that, I don't think there's going to be anything with China. There's going to be maybe tariffs here and there everywhere, the slight provocations, but occasional, sporadic, not very frequent. With Russia, I think nothing is going to happen. Maybe they'll freeze off the conflict in Ukraine, but that's pretty much it. Iran could potentially be the one thing that's different from 2024 or 2023, because most probably there's going to be less Iranian oil. But even that, could that lift oil prices anywhere beyond where they already are? Maybe a couple of dollars, not more. So that's pretty much it. To me, it's a stable year with promises of peace and stability.
Oh my God! Well, I wish we could all be as positive as you are, and Omar. Kate, let me go to you maybe for a bit of realism. Maybe it's left up to the women to bring us back to earth. I mean, Viktor's point on Iran is interesting because yes, Trump is coming in and the belief is he's going to be harsher on Iran and sanctions, but he also wants stability, anti-war, etc. What I've been hearing the last 2 months is that actually Iran's primary, obviously, a priority is economics, its economy, it's on board, like Saudi Arabia, economy first. Right. So from that sort of geopolitical perspective, Kate, do you see the Gulf countries sort of getting on board that sort of economy ship and resolving, all other sort of political issues as seems to be the tendency at the end of the year?
When have you seen that in the past? I mean, I think I don't agree that it's going to be a quiet, peaceful year because it's going to be a very volatile year. We're not going to see maybe American boots on the ground, but we are going to see more trade, maybe not trade wars, but I think there's going to be a lot of tension. There is going to be a squeeze on Iran. I mean, let's not forget, Trump is a big supporter of Israel. He's the policy, the Washington policy of allowing Israel a free hand to annex more land is going to cause tensions because at the end of the day, it's not going to be easy to bring about what had been hoped for before, is that bring Saudi Arabia and Israel together, peace in our time, etc. So I think it is going to be a very volatile year. I think it's going to be more difficult for Iran to sell its oil. I think there's going to be a squeeze on Iran. I think if, Trump wants to become energy dominant, which means that you need to make space, right? Because at the end of the day, demand isn't that strong. So a squeeze on Iran, Russian gas going to, Russian gas isn't really going to Europe anymore as much. LNG, yes. So I think I don't believe that it's going to be as smooth as all that. And don't forget, you're getting a region here in the Middle East, in the Gulf states. The countries are becoming more assertive, the UAE, Saudi Arabia, they're not going to be pushed around anymore. So I think you're getting a new sort of paradigm. So that's really my opinion. And don't forget, Trump has the power of X, with Elon Musk being very disruptive and interfering in the affairs of, European countries and so on. So I don't see that it's going to be very smooth. I think the climate agenda is going to be affected. It may not have an immediate impact on the energy markets, like the day after, but there are going to be a lot of changes, and that's going to have an impact.
Okay, thanks, Kate. Omar, let's look at demand support, if you like, for prices. I mean, we've looked at policy. We're talking about policy now, US policy, how that might impact things. We had our Asia session this morning earlier, and a lot of comments on China outlook. This 5% growth target figure, which China is continuing to put out. Mixed opinions. We had some people saying that China will be steady this year in terms of oil demand. I mean, at the end of the day, Gulf oil producers rely on that, don't they, for that marginal difference to supporting the price, to supporting their budgets. Should they be concerned, do you think, going forward?
Well, I mean, I think the problem here is that, people try and think about oil in terms of, supply and demand and kind of economics, and they again completely ignore anything to do with geopolitics. So what Viktor was saying is that the real politic, if you like, is that the US has lost the war against near peer rivals. So it's no longer the dominant kind of, we are number one and USA, USA, USA. That's finished. And I think you've seen that with what Trump is, I don't know if anybody saw his media thing yesterday, but I mean, it was very clear. He's basically, he's gone from we're gonna, the Biden, geriatric kind of, we're gonna take on Iran and Russia and China. And Trump said, you know what? We're going after Greenland and Panama and whatever. So you can forget about it. So I think at the end of the day, I think basically, I don't see anything to do with Iran. I think basically they want lower prices. I think, if you've been doing something for 40 years, which is like sanctioning Iran, if you still don't understand that it's not going to get you what you want, then, you have a serious issue. So I think that the US will basically, I think the difference between Trump and Biden is that, I think the Trump administration understands the new position that the US is in, massive deficits. They're going to lose the war in Ukraine. They've had disaster after disaster, the southern border, fentanyl, the fires, the problems at home. They need
The
to
domestic
fix
focus.
the domestic stuff.
Yeah.
Yeah. So I think domestic stuff. And don't forget that Trump is, a narcissist. So he'd love to be able to sign a quote unquote peace deal with Iran and say that, he saved I don't know what and he did I don't know what. So I counterintuitively, I expect it to be much more stable, not more volatile.
Okay. Viktor, let's go talk a bit about global economic data out there. Obviously the US had a pretty strong year economically. A year ago, people were saying, oh, this recession's going to start. We're going to start to see the figures. Obviously, we saw inflation, maybe not on the ground, but on paper, come under control. Similarly in Europe. But of course, that all impacted, demand projections, whether it was looking at China, US, global economy, OPEC on one end of the spectrum, IEA on the other. Do you think we're going to see those forecasts, they probably already are, converge more this year, a bit more of a tighter look, and especially from Middle East producers' perspective, are they going to get more real about what's out there in terms of demand projections?
They should, because ultimately, I mean, we're not going to see demand growth above 1 million barrels per day at any point in the future. That's my firm conviction. We're slowing down, and someone should accept that we are slowing down. We're not peaking, but the slowdown is evident. So they should converge, but they should converge on their way down rather than on their way up. So if someone still believes we're going 2 million barrels per day a year with the China that we currently have, it's not going to happen. I just want to go back to one of the topics that we've already discussed with Omar and Kate, specifically whether it's going to be volatile or not. I think the one thing that people could trade this year is not the actual reality, but utterances of Trump, which are completely different from reality. I mean, for some reason, everyone is preoccupied with Trump taking over Greenland. Why are we even talking about Greenland? I mean, Greenland has rare earths. The reason why everyone wants rare earths from Greenland is because most of the rare earths in the world are from China. So it's really just basically a safety valve in case something happens to have the minerals that you really need. But again, I don't really see any political risk in this. If in fact the Western world starts to mine its own minerals, but it's better for everyone. ultimately we'll just, wake up to the reality that everything should be developed at the same time. We shouldn't say no to any of the resource that we have. And in this sense, the Middle East, I think, is very much the bastion of this. The Middle East combines oil and gas, renewables, nuclear, everything. It basically doesn't say no to a single technology that could be potentially out there. Even hydrogen looks more competitive in the Middle East than it looks in Europe. So in a sense, the Middle East will be the most liberal, Adam Smith-like basically player in the global economy, whilst everyone is playing with their tariffs and trying to protect their economies. Europe is going down the drain, and the Middle East is still growing. So in a sense, we should be very proud of actually being here and talking to one another in this beautiful region of.
As you said, and the Middle East, or at least the Gulf, is blessed with those certain resources, obviously. I mean, Kate, but let's talk about the budgets of these Middle East producers, because, of course, OPEC has had a certain policy for the last year or two. It's had to adjust bringing back oil back for obvious reasons. The forecast is it will continue to hold now what is now 6 million barrels a day back, at least for the time being. Can they afford to do so? Will they continue to do whatever it takes, essentially, to support the price above $70? Or, could they afford to go below 70 if they decide enough's enough, we need to release our oil?
I don't think there's any room for them to. I mean, it's going to be very, very tight. But again, it depends very much on what happens. I mean, Libya at the moment, we're seeing more disruption in Libya, possible strikes. You've got the situation in Iraq. You've got Iran, which has a huge energy issue. They've shut down the plants. Gas is in short supply. Iran is actually in a very weak position at the moment, so it's an easy target. So I think much of it depends on how supply develops at the moment. We know where demand's going; it's weak. I think we're seeing a structural change in China. Some people expect that demand for at least gasoline is going to peak this year.
Yep.
So
and diesel,
but
and
one
diesel.
thing, and diesel. But one thing, and in fact, Viktor, I think KPLER's, we've used at MEES, we've used KPLER data. The amount of refined product that's coming out of the Middle East, which is not subject to OPEC quotas or OPEC plus quotas, is rising. So that's interesting. And Viktor, you mentioned hydrogen, but of all the announcements that we hear about hydrogen, the announced investments are close to 700 billion. But only 11% is committed because of the difficulty of finding off-takers. So I think hydrogen, yes, is coming, but it's not now. It's not coming now, maybe not even this decade, because costs have to come down. But at least the investment is here. And as somebody said, I think Victor said, it's cheap. It's cheap to provide renewables. It's slowing down in other countries. Germany's having problems because it's just not economic. It's not profitable. So you have to look at profits. And of course, the Gulf states at the moment need the higher price, or at least need a certain price in order not to fall into deficits. Saudi Arabia is in a trade deficit with China already. So I think that China's not going to be able to import as much Russian oil. So there might be a slight window for the Gulf producers to sell more, particularly to Asia, because you're not going to see much demand in Europe unless the gas prices forces another switch, from gas to oil or even to coal for that matter. So I think there might be a little bit room to maneuver, but it much depends on whether you have any supply disruptions from Libya, inability by Russia to sell to China because of the sanctions on shipping by the US. So all of that might play into the
but plenty of oil to cover for that, already, obviously, and then you've got the whole non-OPEC supply continuing to rise. Yeah. Victor, just back to you on that question of sort of hydrogen, renewables, investment in the energy transition by the Gulf countries. I mean, how are they, they've obviously made billions of dollars of investments, continuing to obviously focus on their oil for the next 10 years as well, and cleaning that. How do they look, do you think? I mean, there's been a bit of a retraction, like Kate said, in terms of energy transition investments, profitability, affordability, etc., looking at consumers in Europe in particular. But do oil producing nations have to sort of look at a new way of balancing their investments going forward between things like, CCS technologies and continuing obviously to keep an eye on their oil revenues and supporting those? Do we see a different approach, do you think, going forward, or more of the same?
I mean, as long as oil production costs across the Middle East are so low and the oil price is still 70, everyone is going to focus on oil and gas because it just makes more money. But I think what's important and what I would try to highlight is that if you compare the Middle East, say, to Europe, I mean, the solar radiation levels are just way above anything in Germany. So the Middle East can wait. Wait for the technology to mature, the standardized cost of a solar panel to drop to an absolute minimum, and only then start to basically a massive building spree. It doesn't matter. It's just more competitive because it's better placed. The labor costs are lower. Basically, you don't have trade unions that disrupt your operations day to day, such as in France or in Germany. The solar radiation levels are beyond anything that you could possibly have in Europe. And you even have nuclear. To me, that's a recipe of success. It's not really a question of whether you go full Apple or full Samsung strategy, whether you want to be the champion who pioneers the technology, or whether you just join in the second wave when it's already cheap and competitive, and you don't need to develop anything. Basically, just take it and use it. In either case, basically, regions like the Middle East will win, simply because they're more competitive. That's why the Germans want to right now build hydrogen plants in Namibia, because Namibia has sun. Germany is clouded for most of the winter. That's what they also suffer from now, when basically the wind is not blowing and it's really, really cold. And as a consequence, you just need to build competitive edge over competitive edge. And the Middle East has oil and gas, and gradually starting to have renewables as a competitive edge. So I think it's going to be strong. Not now. Now oil and gas is king.
Yeah, absolutely. Okay, well, great. Music, lots of people's ears in this region. Omar, let's talk a bit about Fed policy, interest rates, macro, and how that might be feeding into obviously thinking in the oil markets. You may tell me it's separate in a way, but we had obviously the activity that we had last year with the Fed and what it did, and bringing inflation under control to an extent. A lot of speculation now going forward, is it going to keep rates where they are, keeping an eye on obviously in inflation to do that. Mixed opinion there on whether it's going to continue obviously to cut or keep them stable. What's the outlook for that? And does it matter to oil markets? Does it matter to those producing oil and buying oil?
Yeah, of course it matters. It matters because it's about liquidity and it's about, the general health of the US economy. Now, to put it in simple terms, if the US doesn't cut interest rates, I cut off my arm, basically. So they can't afford to keep interest rates where they are. They cannot. So the US, their budget deficit, everybody keeps looking at the budget deficit in, I don't know where, China, and the budget deficit in the US keeps growing. Their debt is ginormous. The debt in the West is massive. They have nothing. They have basically just all this paper, and they're paying more to finance their debt, to service their debt, the USA, than almost anything else in their budget. They pay more to service their debt than they do on defense, right?
Why
Over
wouldn't
$1 trillion.
So why don't they just continue kicking that can down the road? Why would you say something has to change
Because
now?
they will keep. No, they can't. They can't change. So Trump came in promising tax cuts. So spending in the US is going to increase. They will continue to live beyond their means. Their deficit, which is currently running about 1.7 trillion, is going to keep ballooning higher. Now, because the dollar is the reserve currency, they've managed to do it so far. But at some point, people will lose faith in the dollar. And that will happen, traditionally or historically, extremely suddenly. But they're having problems. So all the debt that they sell in the form of treasuries is basically at the front end of the curve. Nobody's interested in 10 years and 20 years and whatever. And there's a ratio. You can look at somebody selling like 10 years treasuries compared to, let's say, 1 year treasury and rolling it every year, right? Nobody's buying 10-year treasuries. Nobody's buying 5-year treasuries. Why? Because the US has a fiscal problem. So the US, for certain, whatever they say, they'll keep saying, yeah, we've got control, everything is good, everything, it's transient and temporary, and yeah. And they're going to cut interest rates. And inflation is going to surge. And then they're going to tell you that inflation doesn't include housing, doesn't include heating, doesn't include education, Doesn't include anything. It
Or
includes like
energy.
the price of carrots. Yeah, price of carrots is stable, so you're good. So they're going to definitely cut, which means more liquidity, which means higher prices. If you look at the price of oil today, in real terms, it is one of the it's cheaper than it's ever been. I mean, it's historically at very low levels, even with the geopolitical situation. Why? Has nothing to do with supply demand, has everything to do with geopolitics. It is the biggest, most widely traded commodity financial asset, commodity financialized asset on the face of the earth, by far outstripping gold, outstripping all other commodities put together. And it trades on supply demand a little bit, as a financial asset a lot, but also, it has a big effect on economies. They want to keep it low.
Okay, all right. Thanks, Omar. Kate, I mean, on that front, supply demand dynamics impacting the price of oil. Let me just have a look at the survey question, and I'll go to you. What's the most likely outlook for prices this year? They'll remain near $70, or they'll go above 80, or they'll fluctuate between 70 and 80. So, I mean, the range there between 70 and 80, or could we dip below 70, or will something push us above 80? Kate, let's just talk about China and supply demand fundamentals. And we had a few comments on that in our earlier Asia section, but I want to get your view on that, because increasingly China's taken that turn, not just in its growth GDP number, but also in how it's computing its energy mix, clearly making headroad in its EV, in its LNG, etc. And what does that raise a concern for oil producers here in the region, do you think? I mean, Viktor's saying they're focusing on that for the next 10 years. Should they be concerned? Apart from the growth factor in China, but just taking in less oil, per percentage of GDP growth, if you like.
Actually, if you read the analyses that are coming out of places like Saudi Arabia, our friend Ibrahim Mahana wrote an article that was published yesterday in Asharq al-Awsat, and he's basically, I mean, they accept that Chinese demand is going to peak, but at the same time, don't forget they do have downstream investments in Asia, particularly in China. So it's petrochemicals and it's crude oil, petrochemicals. So there is an added value there that is separate from just crude oil sales. And as I said, product sales are growing. China's going to find it much more difficult to import Russian oil with from shadow tankers. It's going to find it harder to buy Iranian oil. So I think it's not that worrisome at the moment, but if you read Mohana's article, he's talking about Africa and the expected growth in oil demand in Africa, with population growth and urbanization and so on. So I think, the GDP, the African GDP is going to really sort of take off. And they're not going to be just relying on solar, because you need to develop, you've got urbanization, you're going to need a lot more energy. So I think that is where the focus is very much at the moment in Africa. Viktor mentioned solar in Senegal. So I think and if you look at the international energy companies, they're investing a lot in Africa, not only in North Africa but sub-Saharan Africa. So I think there is more growth, there is more life for oil and gas, regardless of what's happening in China. India is going to come up. Obviously, it's not going to be as big as China. The Chinese economy is stuttering, but it was also in a structural change. It was moving more into a sort of service-oriented economy. So that was expected. It's not as if it's a surprise. But I think in terms of supply-demand fundamentals, they are going to be tight. Much depends on what happens in the first quarter. Whether you see dips in stocks or builds, it's, obviously OPEC Plus don't want to see a stock build. So they want to keep prices at a certain level, but I don't see them going above 80 at this point.
Okay, thanks, Kate. Viktor, let's just touch on shipping, because of course, we saw, some disruption, obviously, in the last year because of the sort of geopolitical situation in the Gulf in general. But again, very little impact there, risk premium on prices. But in terms of energy flows, actual physical flows, should Gulf producers this year have any more reason to be worried that those may be disrupted. The new sort of rerouting from the Suez is now very well entrenched. Outlook for shipping in that context?
Well, in a sense, the fact that there would be potentially less Iranian flows out there would mean that effectively there could be more Middle Eastern flows to China. There could be a vacuum in China, which the Middle Eastern companies could potentially exploit. Again, an opportunity for respective companies' own proprietary shipping departments to just take that. But generally speaking, I think in 2025, the one big risk for shipping is that something happens in between Israel and Palestine, and basically the Suez Canal starts to work again as it used to. Because right now everything is prolonged. Everything takes a much longer route than it should have. Now, what happens if we're back to where we were in 2021 or 2022? Mm-hmm. And then everything gets shorter, everything gets more compact, and then as a consequence, also shipping becomes cheaper. So if anything, I think the outlook is flat to negative, and the negative really starts if Trump wants and sees himself as the big peacemaker, and he genuinely finds a way to find peace in the Middle East, specifically in between Israel and Palestine. That's the one big risk out there that we should be looking out for.
Yeah, and risk. What Iran is the big factor, isn't it? Because the shipping part of risk in the last year has clearly been impacted by those proxies, and we've already seen that weakening to an extent. There's the result of our survey question 30, number 3, 70 to 80. That's a safe bet, obviously. The interesting thing will be if we go below 70, I think from an oil producer's perspective, that has been the sort of floor threshold that they have not wanted to go below. Thank you so much. We've just come to the end of our session. To Kate, Dourian, Viktor, Katona, and Omar, Najia, thanks so much for joining us on this Middle East panel. We have one more left in this particular geography coming up, which would be how will AI impact the global energy trading. Will make an interesting session, and then we're on to Europe. So I hope as many of you can join us for that as possible as we go throughout the day. Thanks so much, everyone, for joining us.
Thank you.
All the best.
Thank you.
Thank you.
Thank you.